The year is 1987. Whitney Houston just came out with I Wanna Dance with Somebody. Dirty Dancing is basically at peak popularity, and something tells you that Never Wanna Give You Up is gonna be popular deep into the future. Velour, spandex, and lycra are hugely important in fashion, and bright, fun colors along with shoulder pads are in. Plus, this new show just debuted this year called Full House. It looks great. All that stuff is fun, but you have a bigger plan. You're going to invest. By now, Apple had been founded for about 11 years. Both Steve Wozniak and Steve Jobs have left the company. They're doing their own thing now, but Apple is still running strong. You've been working hard at your job to save up money so that you can get started investing. Minimum wage is only $3.35 in 1987, but you got that promotion a while ago, so you make almost the average pay of about $18,000 per year. You get the $1,000 you've saved up, toss it into Apple stock, and decide not to sell it for at least 35 years. And here we are today. I'm wearing this old high school track and field shirt since we just went down memory lane there, so I'm shocked I can even fit into it, but had to wear my vintage clothes. Let's answer the question that you came here for. If someone invested $1,000 in Apple in 1987, which is 35 years ago, how much do you think that that investment alone would be worth today? I'm guessing that you'll be wrong, because I was wrong. I guessed something like $500,000. If you want to, leave a comment with your guess before you keep going. To find the answer to this, I went to Portfolio Visualizer online. We can go into this section where you can back test your asset allocation, and it's really simple for us because all we have is one stock in this little portfolio. So we'll put in the year 1987. We'll make sure that we only invest $1,000. We will reinvest dividends. We'll type in Apple as our one and only stock, 100% portfolio, and hit analyze. Oh my gosh. Those are some righteous returns, man. Totally tubular. I had no idea it would be that much. That's nuts. So your total would be $1,115,847. That is ridiculous. Look at that best year, 211.9% in 1 year. That is nuts. And the worst year is pretty bad too, 71% down. But still, the best year, 211%. When was that? Let's look at the chart here. So it was actually kind of steady and like slow growth up until 1993. It falls, hits kind of a rock bottom here in like late 1997-ish, and then it's just been nuts since then. That's amazing. Okay, the year of that best return then was 1998. But that's crazy because look at this line here. That's the 100% return line, which means that in 1987, the year you started, it got over 100% return. In 1998, 1999, 2004, it got over 200%. And then there have been 3 other years after that that are also over 100%, 2005, 2007, and 2009. That is crazy. Well, you picked a good year to start there, starting in 87. And that's wild too because most of those really good returns were even before iPhone days. Didn't the iPhone come out in 2007? So that was a huge year. But even still, that was tremendous growth starting in the late 90s. So in more normal terms, that works out to an average annual growth of almost 22%, 21.97%. That is incredible. So what does this mean for us? Does it tell us that we need to invest in Apple today? Does it tell us that we need to find the next big tech company like Apple to completely come in and shake up a market when it comes to something like tech or something like personal computers or phones or whatever? Do we need to go and try and find them? I mean, this is kind of a once in a lifetime thing when you come out with something like personal computing or come out with something like cell phones, and Apple totally changed those games. So it's a little bit difficult to know who the next Apple might be. If you could figure that out, you would potentially make a lot of money. But I think that would be very difficult to quantify. Still, if anyone did this 35 years ago, they would be very happy with their returns by now. Just for a fun comparison, let's look at Apple's stock price so far this year. Oh, wow. Down basically 13% as of today. That is not great. If anything, one of the takeaways I'm going to take from this little experiment is that over the long term, if a company is adding value, it's managed well, it's doing things the way it's supposed to do them, then the stock price may probably go up. But even then, on a company by company basis, it's really difficult to predict. Look at something like this. I mean, Apple is one of the best companies in the world, probably overall, wouldn't you say? And here it is year to date, 13% down. I mean, that's huge. Over the last 5 years, it's done well, over 300% in the green, but still, looking at anything on a really narrow time frame is pretty dangerous because it can tell a very different story than the overall time frame. That's kind of why I try not to look at these things in the day by day or week by week kind of metrics because it's difficult to interpret. How do I inform my own decisions with that? I don't know. As of right now, with all the crazy volatility in the start of this year, my basic goal is to keep the blinders on, stay the course, dollar cost average, and do what I've always done over the last decade. So far, it's worked out well for me. So far in the history of the stock market, doing that has worked out well for people. So that's my plan. Stay diversified, dollar cost average, stay the course, keep going. Well, that was a fun little experiment. If you'd like to leave a secret comment, today that word is Bueller. Because come on, it's 80s. It's cool, man. I'll keep an eye out for these because they are my favorite comments by far. To learn more about those kinds of investing tools like I used for this research, check out this video where I go over my top investing tools. Portfolio Visualizer is just the beginning. Check that out, man. Vintage. Buckeye track, 4x fast. I was on a 4x4 and 4x1 relay team, so hence the shirt. How do I still own this? Hey, do me a favor, please subscribe. Thanks. Bye.